Are we live?
Yes, you can start.
Okay. Uh, Good evening, everyone. And first of all, thanks a lot for taking out time and joining this call. What we are trying to address out here is obviously Union Budget 2026-27. But our entire objective will be to make it crisp. And by end of the call, hopefully we will give you something what we talk about, what we recommend as a broking house. So without wasting much time, I'll quickly introduce myself. I'm Abhishek Mehrotra. I head investment products, and I have Mr. Devarsh Vakil, who is head of our research, retail research, and with all our experience, we are looking forward to give you a delightful learning over this next 30-35 minutes. Before I transfer discussion with Devarsh, I'll request all of you that this call is specifically for your sorting out your thoughts also. So if you have any queries, you can post it on the chat. And if you have joined via YouTube, you can post your question and we'll try to address that also during our discussion. So while I'll moderate, I'll ask Devarsh they wish to do that all the discussions about. But before we actually go to budget, union budget, Devarsh, what happened yesterday, what disappointed the market was something which is on top of everybody's mind. Though people have spoken about budget, but more importantly, what happened yesterday in terms of market? It was down almost 2%. So can you throw some light on it before we actually go to the core of the discussion? Over to you, Devarsh.
Right. Thank you, Abhishek. So it's pleasure to be with you. So obviously there is always a confluence of reasons why market we behave the way it behaves. Top of the mind, many people do feel that the STT and because STT was put in the derivative trades, that led to some disappointment. That was primarily a reason, but I don't think that was the complete reason why it fell. Apart from so markets have been weak, as we all know. The sentiments have been weak for quite a while. Apart from the global weak sentiments, there was a liquidation event which was happening in the bullion market because what happened in the gold and silver in international markets on Friday and subsequently on Indian commodity exchanges. A lot of people who were long had to provide for mark-to-market losses on gold and silver positions, whether it was in the commodity exchanges or the leverage position on ETFs in stock exchanges. So when you incur loss in one instrument, usually in order to pay for those margins, or if you don't have enough margin, the risk management departments of various broking houses do also liquidate positions. So that was also one of the primary factor which led to sharp cuts in many of these stocks. And I think that also continued in the first half of today's markets also, because bullion were down early in the today's market. But I think those positions should have more or less cleared by now. And now we are back to tracking international cues and local developments.
Okay, so yesterday was specific to one day scenario, and definitely since it was a trading holiday for, in fact, for banks, for clearing houses also. So, and a lot of other economies, so probably the participation flowed the next day. Clearly understood they were. In fact, for STTs, just to tell, since that was one of the biggest discussion yesterday, now way forward, I think effectively from 1st of April 2026, the new STT will be levied. So anybody who is buying options, currently they were paying 9.75 as an STT. Now way forward, they'll be paying 14.62 per lot. And for futures, it was 325 rupees and now it will be 812. So it's almost more than double in that sense. So so that was one of the highlight for which is impacting a limited set of audience who are primarily participating into derivatives market. But on the market as a whole, Devash will want to know what are the key highlights. You can spend some 5-7 minutes on what are the key highlights of the budget, what an investor should take home, or what people should remember if on this, and what is your take on that?
Sure. So what I'll do, I do try to share the screen and show one of the reports which we have issued. Is my screen visible?
Yet, yes, yes, it is visible.
Right. So um, we did come out with a report on union budget, and as we have done, I titled it "Populism to Pragmatism." So if I were to sum it up in the one line, rather than giving any instant uh, soaps or instant measures which takes the market sentiment higher or markets higher, FM chose to lay the foundations for structural growth. And there are a whole host of various measures which can be discussed that will take markets higher. Um, Obviously the budget was themed around government's three sankalps: the accelerating of the economic growth, fulfilling the aspiration of people, and vision which they have is taking everybody along to higher disposable income, higher economic growth. Um, if we were to look at the sectors, I think clearly pharma, IT, and textiles are some of the sectors, and obviously manufacturing and capital goods, which will benefit from various provisions of this budget. I thought STT and because of the higher borrowing, PSU banks and capital market stocks were impacted negatively. So budget had done a lot of things which are actually going to take India to a higher growth trajectory. The budget mathematics, the arithmetics is very sound. They have more than provided for all the expenses. In fact, they have been very conservative in providing the expenses. Small savings, one of the sources of finances, they have been very conservative, as well as on the tax collection side. So there is no doubt in my mind that they'll be able to meet these numbers. And at the end of the 1 year, once we are discussing the next budget, I think it will turn out that the government not only more than met the fiscal deficit target, but I think overshoot them. The individual measures, if I were to take a couple of minutes to share about them, obviously the miss was the unexpected increase in the STT. So markets were expecting that there could be some increase in the STT, but they were expecting that along with the increase in STT, there should be some relief on the capital gain tax side. There should be some relief for foreign institutional investors on the taxation side. That did not come, and that triggered some kind of a sell-off. Otherwise, markets were otherwise market budget was okay. So that was one of the reasons why sell-off. The interest burden is also gone up. The overall borrowing, the gross borrowing number was little higher, 17 lakh crore, than the market was expecting, about 16 to 16.5 lakh crore. So that also triggered some kind of sell-off. But there also there is a nuance there that the RBI on the 6th of February may come out with some more measures, and that may lead to a more finer understanding where the overall net borrowing may turn out to be much lower than the gross borrowing, and that should help the bond yields. Overall, the 12.2 lakh crore capital expenditure number is fantastic. It is almost 4.4% of GDP, and that 12.2 lakh number is highest in last 1 decade. And it is remarkable achievement given the constraint of lower tax collection because of the GST and the income tax cut government has given last year. So given lower collection from all these, they have managed to allocate lot towards the capital expenditure, and that is very timely also. Keep in mind that the government may not have that kind of a room in next budget, because by the next budget, the eighth Central Pay Commission may come into effect, and there government will have necessarily have to provide for the eighth pay commission, and that's why this was the budget where they should have provided for higher capex, and they have done that. A lot of small measures which will affect MSMEs, which will help them actually. Now MSMEs will be able to discount their invoices on the trade platform, so they will not be dependent on government servants, or they will not be dependent on central government employees. The transparent measure will also help small and medium enterprises. Government has also done a huge job in terms of the collection of capital receipts from miscellaneous capital receipt. The divestment target has been raised from 33,000 crore to 80,000 crore. That is a very remarkable number. That means that the market is expecting that IDBI Bank and a lot of spare real estate of PSUs will be monetized this year. That should help the sentiment improve. They have also talked about creating a high committee of banking. This committee will look at reforms in banking, especially the PSU banks, and we can expect some kind of merger and acquisitions happening in PSU banks over the year. Tourism, hotels, all these will also get a boost because of government has given a lot of priority in generating employment there. And obviously there is also a huge benefit of giving the tax holiday for creating data centers into India by 2047. So 2047, there is a tax holiday. So there is a lot of clarity that if you put a lot of new money into data center, you don't have to pay taxes till 2047. So these are the key highlights of the macro provisions in the budget which they have done. Two numbers which I would like to highlight is the budget estimate also pay for 18 lakh crore kind of capital receipt, as we discussed. A lot of disinvestment and spare monetization of land is expected. The interest payment has gone up, and I think because of this, rating agency may not upgrade Indian markets or Indian rating soon. Sector specific, there are a lot of developments, but I think we will. I'll stop here and we can discuss that during the course of our discussion.
Sure, Devarsh. I think that was a quick. So all the viewers, we are not going in detail because this report is available. You can see it. What we intended to do is make it more interactive, and I'm very happy to say there are a lot of questions pouring in on the YouTube and here on the chat. But before we move on to questions, Devarsh, can you tell what was the hits and misses of this budget in a nutshell, which you wanted to which you would have believed that has impacted the investors or the entire forum?
So most of the salary class and middle class people like us, we always expect some kind of sops in the form of higher slabs or some rebate in the form of standard deduction. That the things which improve the sentiment was, I think, was missing. They kept it like a business-like budget. A lot of steps which were taken are structural and it will have an impact, but it will be a longer term impact. Misses in the form of a higher STT should have also coupled with some kind of rebate on the taxation on the STT, on the capital gain tax, either short term or long term. I think that is a clear miss from a lot of market participants. The STT increase will lead to some kind of increase in cost for high frequency traders. And because high frequency and algo traders do trade a lot of transaction per second per minute, so maybe that market may have some kind of impact that will lead to some kind of reduction in participation from those players, which may lead to little bit of more uh, impact cost on various transactions in the derivative markets. Sector wise, I think a lot of schemes have been announced where MSMEs, right, capital goods, and engineering companies, cement companies, infrastructure companies will find it uh, a lot of opportunities for new orders coming from government over the year. Okay. So I think those are the areas which are clearly a hit for the from the budget.
Okay, so budget is a history now. We have moved forward. It's more than 24 hours, and we have a habit of moving forward. So now though there are a lot of questions pouring in, and I know I will try to do that justice. But what's your outlook for this year, Devarsh? Because that's the larger theme which everybody's looking forward for. And obviously, we will talk about precious metals because there are multiple questions on that. But broadly, how do you see this next 11 months panning out for India as an investment economy, or for investors to participate?
Right. So, Abhishek, as you know, last 1 year, 1.5 years have been challenging for Indian markets. There have been a lot of uh, headwinds for to our equity markets, starting from geopolitical concerns, the India, Pakistan, or Gulf, or Russia, Ukraine. So that backdrop was there. There were expectations that India will have a swift deal with US, but a lot of time has passed and we do not have that deal. So 25% duty, and then it was hiked to 50% duty on tariffs on India. So these are the various major challenges which were there. Now I think, and obviously because of all this, we did not have the enough earnings growth. Single digit earning growth, 5% kind of earning growth led to almost similar return, only single digit return to Indian investors, which was fairly subdued compared to the heyday returns which we saw from COVID low to 21 to 24. So after stellar returns in the market, last year has been very challenging. Now, if I take into consideration the factors which are going to impact our markets, so one, the valuation has come down around 25,000 levels. We are fairly attractive compared to the past, and the earnings growth, cyclical earning growth, is expected from now to next 1 year. 14-15% kind of earnings growth is expected. The valuation has now corrected to 19 times, which is more or less the average uh, valuation for Indian markets. Mid cap and small cap, some of them have corrected 30-40% from their peaks, and they are looking quite attractive. So, looking at the various data points available to us, I feel we are looking at a much better market conditions over the next 11 months. Small cap and mid cap, there will be a lot of stock specific opportunity to earn out of the markets next year. So, to sum it up, I think we are a lot of us have a recency bias, and sentiment is driven by the recency. The last 1 year has not been that great for the market, but I am looking at clearly blue sky and better days for the next 11 months going ahead.
Wow. So, you mean to say the worst days are behind us?
I firmly believe so.
Great. So, if that is the case, you can share us some ideas which investors are looking forward for before I go on to the questions, because there are a couple of questions pouring in. But share us, if you say next 11 months are good, broadly, how do you see the overall economy, or sorry, the overall market phasing out, and some stocks, if on your recommendation?
Right. So gradually, I think that markets will recover, and eventually we should move to the all-time highs and beyond. But it will be a labored rise, like what we had euphoria in 21, 24. That kind of sharp up move I'm not expecting. Stock-specific opportunities should be there. We do come out with various ideas from time to time, like our flagship product of the peak of the week. So I recommend investors to do look at those products as well. And we have a lot of stocks under coverage. So those ideas are all there. Apart from those ideas, stocks which are looking currently attractive, and if I were to name them at this price moment, at this price, I think there are some 3-4 ideas which I would like to highlight now. Uh, Abhishek, is screen visible? You can see
Yeah,
the
it
Tata
is.
Steel. Yeah,
Yes.
so okay. So 3-4 ideas which I would like to highlight is that Canfin Home, one of the housing finance companies, is now attractively valued. Um, I think at 1.6 times price to book and about 10 times forward earning, it looks quite attractive at this level. By the way, all these ideas which I'm discussing, we already have a report, and these are the ideas which you can, if you want to read in detail, you can always go to our website and app and read about them in detail. There is a detailed research report available. Similarly, apart from Canfinome, I think oil and gas as a sector has come to a very attractive valuation level. Crude oil prices have more or less bottomed out, and I think from here on, oil exploration companies will also have decent earnings going forward. We think that the at this valuation, it looks attractive at 477 with a target of 553. Budget had a one of the provisions where they have given good allocation towards 40,000 crore kind of allocation for electronics component and manufacturing PLI scheme. I think Sirma SGS is one of the companies which can actually benefit out of these new provisions and PLI scheme. So with a large order book, I think this company can be one of the beneficiaries
Devarsh, your screen
going ahead.
is stuck at Oil India. That's that's what I can see.
Oh, okay.
So you spoke about, yeah, that's the second stock which you spoke about.
Now,
Oh,
is it
I,
at Sirma now?
no, it's at Oil India.
Okay. Let me try to fix that.
So well, you can name the stock. So one is Oil India. Amod, am I audible? And
Yes, Abhishek, you are audible.
oh, I think probably Devarsh has got disconnected. So by the time all those people who have joined in, uh, so we spoke about Canfin Homes, we spoke about Oil India, we spoke about Sirma. These are the three scripts which they were just highlighted. There are some questions on mutual funds also. What type of mutual funds are expected to deliver good returns in 26, 27? Uh, just to answer your question, we have a reckoner, which recommendation basket, which I'll suggest each one of you to go through. But in terms of categories, FlexiCap as a strategy continues to attract us the most because herein the fund manager has all room to play between large, mid, and small cap. And so I've just so Devesh, by the time you joined, I just answered one of the question which was on mutual funds, and that's what is one of our favorite topic. So I just cleared that. Yeah, over to you. We spoke
Sure,
about
sure.
yeah. So we could see three stocks which you spoke about, and yeah, which was the fourth one before we move toward the Q&A.
That's why I wanted. Sorry for the interruption. The
No
technology
problems.
sometimes fail us. So Canfin Home, Oil India, Sirma SGS, and Tata Steel. These are the three, four stocks which look
Okay.
attractive at this point of time. And I would recommend investors, if you are looking to increase the exposure towards equities, they can have a look at these. And apart from all the other ideas which we do keep coming out from time to time.
Right. So Devash, as you said, probably we may this year could be good for us, and we may touch an all-time high. So, is there any Nifty number which is there in your mind, Nifty or Sensex number for by December 2026?
So I think the we should be able to go past the previous peak. Obviously, all these are if and but, nothing is certain. But looking at the market condition, I feel that the earnings growth should pick in. And once earnings growth kick in, we should be able to move past 26,400, 500 kind of level towards 27 and beyond.
Okay. So what I'll do now is I'll shift my focus on the questions. And first question, which is primarily from majority of our audience, is your view on gold and silver and as a commodity or as an ETF. In both the ways, it's backed by the core commodity. Yeah.
So the fundamental central theme which was driving the bullion was a lot of central bankers are actually moving away from their reserves in the dollar term and trying to diversified away into gold. So that fundamental premise has not gone away. But as we have seen in many of these such trends, which are long term, there are episodes where a lot of short term investors do get excited and they pile on to leverage positions. And because of that, there is a euphoria in that market, there is a parabolic move, and then some reason correction comes in. So that is what has happened into the bullion market. I think a lot of leverage positions on the commodity exchange or on the stock exchanges have been liquidated. And I think now the levels have become again attractive for the longer term. So as we have been always recommending that the gold and silver should be a part of your asset allocation, where you should have 10 to 15% kind of allocation depending upon your risk appetite and return expectation, that I continue to favor now also. So rather than looking at silver as a speculation device, I think gold and silver should be kept as a long-term investment allocation and gradually start putting money again at this level in this bullion now.
Oh, that's a relief. That's a relief to a lot of the investors because I think I've covered 25% of the question because one-fourth of the questions were on all on it. Coming to down to a few questions on certain scripts, Devarsh, which is about can you speak about BL and primarily there are a lot of questions on PSU. So can you cover PSU stocks and PSU banks both separately? Uh, because there's news about government going slow on PSU disinvestment, and then parallelly there are certain questions on otherwise BEL also as a specific stock.
So government has actually allocated. Let's divide this question into defense and banks, PSU banks. So defense
Sure.
side, they have actually allocated around 17% higher. The market was expecting maybe 25%, 30% kind of higher allocation on the capital outlay side, but 17% in a way still is a large number, and that means many PSU stocks, PSU companies will get a lot of orders over the year from the government, and that theme will continue to play. I don't think it is a short-term theme. Defense is a multi-year theme, given the geopolitical situation and given the various European countries are looking to uh, put money into their defense companies and trying to build their own arsenal. I think Indian defense companies are fit for being export houses going forward. So we continue to like defense. PSU defense companies may continue to attract a lot of new orders and are attractive. PSU banks, they could have a challenging couple of months to weeks because of the higher borrowing number. There could be some impact on the bond yields, 10-year yields, and that may lead to some kind of a small mark-to-market losses. But again, that is a short-term blip. The asset qualities of these PSU banks are pristine. They are looking at a credit growth. The last fortnight RBI numbers suggest that the credit growth is back, and we are looking at a good capex going forward, especially from government and eventually from private companies. So these banks have balance sheet and liquidity to lend, and that will lead to higher earnings going forward. So at lower level, financials and especially PSU banks are also worth looking at.
Great. And so all those investors who are not looking forward for a very stock specific, you can also participate via ETFs because PSU Bank ETF is available, Defense ETF is available. In fact, PSU ETF is also available. So, well, you can search it out. There are some stock specific questions in the same category, which is on Power Grid, BEL. They were your views in any of these stocks, or are they part of your
So
coverage?
No, Abhishek, we will cover them individually one by one. I request our viewers to send us the queries through email or through relationship manager, and looking at the coverage and various factors, we will more than happy to answer them. I do not want to offhand answer them.
Okay. So in fact, in just on the broader market, because last 118 months we have seen FIIs not being too positive about India. In fact, they have been sellers, and we have been like one of the most ignored market of all the emerging markets where everybody was getting funds. What is your foresight on this, Devarsh, in terms of FII pouring in money, and is there any guidance in this current budget, which is, I think, in fact, there was a GST waiver on FPI services by brokerages. So, will that attract FIs?
So, Abhishek, the reason why FIs did not put that much money were, I think, two. A, Indian markets were trading at a valuation, and given that valuation, we should look for growth. Usually, the most of the FIs do come into emerging market like India for higher earnings growth. That was missing last year, and because of the various geopolitical reasons and our own fundamentals, rupee uh, continue to depreciate, and that was the reason. Say Indian investors, if they get around say 10% return from say benchmark like Nifty, but foreign investors have to calculate their return in the form of dollar returns. So rupee has depreciated against dollar by another 4-5%. So eventually, if some foreign investors would have put money into Indian markets, they would not get even a 4-5% return. Compared to that, the other emerging markets or various Asian markets like China and Korea were offering much higher earnings growth at a relatively much attractive valuations. So that's why money actually got diverted to those markets. But I think now Indian market valuations have corrected. We are looking at a higher earnings growth going forward. And looking at the various numbers in the budget, I think rupee depreciation has also run its course. We are not looking at a very high depreciation from these levels also. On a REER basis, rupee do look undervalued. We think that there is a possibility that if this earnings growth and this economic growth comes in, this GDP growth, rupee is also going to get stabilized here. So that all these measures combined will lead to again re-entry of FIs as the earnings growth kick in from the next quarter. I think gradually we will see that consistent and persistent negative numbers which we are so used to from FIs will turn into first trickle, and then eventually the once the price moves higher, the shorter term FIs, the traders, the hedge funds will also come in. So I think as for Indian investors, for foreign investors also, these levels are becoming attractive for longer term investments, and I'm sure they will come back in next few months.
Great, great. That's another good news for this 11 months to come. So in the budget, in fact, there were discussion about setting up data centers, and these data centers require a lot of power. So what's your view on power sector as a whole, and with or without data centers?
So now I agree that the data centers and the new economy do guzzle a lot of power, and power producers, the companies which are like NTPC and others, are looking attractive. And we, in fact, we have issued a report on power producers like CSC and NTPC. Um, and other distribution and grid companies, there is a lot of reforms which government is talking. In fact, power financiers like PFC and REC are made it to the budget speech also, that government is looking to restructure these financing companies so that eventually we can have better financing for power companies and power sector as a whole. Government were allocating a lot of resources towards the renewable power, but I think now nuclear and also traditional thermal power also will get a lot of attention from government. So power as a sector does look interesting, but obviously, like in any other sectors, we have to check the fundamentals, and also time our entry accordingly. So as and when the opportunity arises, we'll be more than happy to come out with new reports on power sector.
Great, great, great. One sector which is again, which everybody's talking about is pharma because there's a lot of research, research can go into and it can definitely turn around the way. So, any views on pharma sector, Devarsh? Because there are questions around it. So, I thought I'll.
So one sector, Abhishek, which is where we should not look at stocks across the sector, or we should not bet on a sector, is pharma, because each and every stock is susceptible to a regulatory risk. What I mean to say that within the pharma, suppose there is a company, there are two companies in the formulation.
Right.
One company may have a US FDA inspection, and one company may turn out to be a ban on those exports, while another company may thrive. So when I talk about other sectors, there is a generic statement or a generic view on various sectors. But when it comes to pharma, I am very particular that we should not take pharma as a sector, but we should always treat each and every stock as a separate investment into pharma. um, we traditionally last year we have been bullish on local uh, pharma companies who have exposure to Indian branded market. Now the price erosion from generic exporters into US market seems to have stabilized, and US FDA has also softened their stance towards Indian exporters. They also want to reduce the prices of their medicines there, and that's why the new tone from the US FDA and US administrator is becoming more and more conducive towards the exports. So Indian exporters as well as the Indian local producers should have a better days ahead. Recently, we came out with a pick of the week on LUS Pharma, Sun Pharma, and Dr. Reddy. Some of the large pharma companies are also under our coverage, and a lot of CDMO players have been covered by our institutional research team lately. So I think I would recommend our viewers to look at those ideas from a pharma sector, but be stock specific in this sector.
Okay. So there was one question which I can take up is I think one of the viewer wants to know give two small cap funds which one should invest for long term and can invest in lump sum. So I'll suggest go for Bandhan small cap fund and HDFC small cap fund. Both these funds are part of the Reckner which we have, and these funds over the long term in 3 years and 5 years have given more than 20% kind of a returns in 3 years and 20 years. 5 years. So these are the two funds as part of our recommendation. So you can look into that. Uh, Coming back to you, there are questions on uh, fertilizers and chemicals, especially this question on Deepak fertilizers. So any views on that? And while you were touching pharma, I think there are questions on hospitals also. So you have the same view as you have on for pharma, or hospitals you have a generic. In fact, there was some leeway in this current budget also of to the healthcare sector, and the FM was talking about that we should promote hospital tourism also.
Yeah, medical tourism has been one of the
Yes.
themes, yeah, government has been pushing. But so that theme has worked out, and yes, government has given some jobs. But my view is cautious on hospitals.
Okay.
Right now, the valuation at which they are trading is little expensive, and because the last 3 4 years have been so positive for hospitals post COVID, a lot of them are actually increasing their capacities. Next 1 year, we are seeing almost 30 to 40% of higher capacity across the various hospitals are going to actually start getting into market, and that may put some kind of pressure on margin across the hospitals. We think that it is better to wait for better entry opportunities in these stocks. I think over the next 6 to 12 months, we may find a lot of these stocks a little lower than
And
our
a better entry
current
level.
prices. Better entry
Okay.
levels are likely to be
Definitely.
available in
So,
these stocks.
broadly, which sector you have, they were, because that is, there are two, three questions on the sectors which one should invest in for 3 to 5 years. So, which is the sector which you believe has a long room to play and definitely has long legs?
So financials is one of the sectors which is about
Okay.
30 to 40% should be there as a part of your portfolio. And within that 40% allocation, you should allocate towards the PSU banks, private sector banks, and various capital marketplace. Because of certain STT and other short-term headwinds, those stocks also correct exchanges and depositories and all. But over the longer term, I think the theme towards financialization of savings from real estate towards the financial assets is a long-term theme. So at some point of time, those stocks will again also become attractive. So financial is one theme where we should put 30-40% of our capital as a long-term portfolio. Various other sectors from after this budget, I think we should increase our allocation towards engineering and capital goods sector. I think their infrastructure and other stocks are likely to do well. Cement is one of the sectors where we have been bullish. Last 6 months, we have been cautious. I think the time has come where we can again increase our exposure towards cement. The IT sector should be part of your portfolio. Pharma should be there. So 10% kind of allocation to these two sectors are also warranted. One of the provisions which is there in the budget where they have simplified the uh, buyback rules for small investors into the buyback rules, that should actually play out very well through IT companies. I think these companies are sitting on a lot of cash and they would like to utilize those cash towards the buyback. So over the next 12 months, I'm expecting some IT companies, large IT services companies, to also announce as and when the regulation permit them to come out with buyback also. So IT, pharma, engineering, capital goods, cement, and financial. This could be the broad theme, and small various individual stock ideas in various sectors can form
Right,
part of
right.
another 10%.
Right. So I think a lot of our viewers will also be knowing, but I'll still tell them that these themes, some of these themes are also available via ETFs. You can play uh, private banks, you can say private bank ETF, PSU bank ETF. Then there is one ETF which is on capital market, which is minus banks and rest other capital market intermediaries, which could be broking companies, which could be your RTAs or mutual fund companies and all that. So those themes are also available. Uh, so I think we have one. We are exceeding the time, so I'll probably have one or two more questions with, from you, Devarsh, because I'm just parallelly switching between the YouTube and so cement sector. I think we have already spoken about pharma because I'm just going through what are the questions all about. Will you like to comment? So there are a lot of stocks which I think all the people who have joined, they're asking. I'll request each one of you, if you have some time, go on a research page. We have a research as you go on the stocks. There are around 200 scripts where we already have a research report, and that reports get updated as soon as we hear the results on those companies. And so please, because some of them are part of it, so probably it's better if you can go through there. It will become a very you will get a very detailed, elaborated view in terms of the stock. This, and beyond that stock, you will get to know about what's the industry, how what they are doing, and a lot more things about it. So that will be very helpful for you to take a call about investing before a script. And parallelly, if you stick on any script, there is we also give a SWOT analysis, strength, weakness, threat on every script, which can tell you how the market, or that also talks about recent indicators, which can guide you to take a right action for the stock. Because I am seeing questions on BOB, SBI. These are all names which are available there, and I'll not take Devar's time on those scripts because we have been seeing it through. So last question, because Devarsh, I think you touched upon IT, but since there are more questions on the YouTube on IT, I'll just can you just have another? I think anything else to add on, because you have said a positive view about IT, that I could
Yeah,
hear out.
so I think
gradually over the next 1 year, we can expect good returns from IT sectors. I see because of the cash available and the change in the buyback rules, there should be limited downside in these stocks at lower level. These companies may announce buybacks, and that will put a floor to them. Aggressive growth may not come in to these stocks now because there is a lot of actual business churn which is happening because of the disruption in the AI and new technologies which are coming in. A lot of these companies are going through a change in their business model, and that may lead to some kind of delay uh, in finishing their new orders, getting new orders. So I'm not looking at a very aggressive upside from here in these IT companies, but in a portfolio, I think these stocks will also provide a lot of cushion and downside, and they are good dividend yield players, also dividend yield candidates also. So and obviously stock specific, there are some stocks which do come down to attractive level from time to time, and we do pick them as a part of our pick the week. We have done a lot of such IT stocks, recommended them in the past also. So as and when those attractive entry points are available, you should look at them as a broad sectoral theme. I think rather than looking at a very aggressive upside, I am looking at IT as a selective stocks where there is limited downside left from here.
Okay, okay. So I think there are a lot of there are some questions on foreign markets and foreign ETFs. To say so very simple feedback to the investors. Look, there are limited ETFs, foreign ETFs available. There's Nasdaq, there is Hang Seng. So those are available in India where which you can participate. But if you really want to participate on the plethora of ETFs which are available in US market, we have a global investing proposition which you can go on our app, global investing. You click, you can open another international account, and from there you can participate in all kinds of ETFs which are available, and we keep on talking about it. So this session is not for it, so I'll just stop on that. But yes, if you want to have ETFs like copper, or if you want to have ETFs like aluminum, those, and in fact they are leverage ETF also. So those things are available on that. With that, I'll probably try to end this call because we are anyways overshooting the time. I'll thank each one of the viewers who have taken out time to participate. If your question remains unanswered, please write to our HDFC Securities customer care team, and that's how your questions will reach to us, and we will be happy to answer to you. Or you can ask your relationship manager to get in touch with your questions, and we will be happy to revert to you with via them. We in fact there are feedbacks about doing these interactions more. We will definitely try to do more such interactions, and we'll come up and we'll update in the similar fashion. But thanks everybody for joining. Key takeaways, I think the fourth stock with Devarsh spoke about. Devarsh, can you talk to them about that once again, please?
Sure.
Those four tips, the names. Yeah.
Yeah. So uh, these are the four stocks which are looking attractive at this level, but these are not the only one. I'll just
Right. Yeah, definitely.
yeah.
Yes.
Yeah, so Canfin Homes, Oil India, Sirma, SGS, and Tata Steel. These are the 3-4 ideas which are looking attractive at as an entry point from current levels. These are all stocks which are under our coverage, and you can look at them. If you want to read more about it, the reports are available on our website.
Right. For anything specific, please, if you want to know, please reach out to your RM or write to our customer care, and we will be happy to answer your questions. Thank you everyone for joining. It was pleasure giving our views to you, and we hope you are enjoying transacting through HDFC Securities. Thank you everyone. Thank you, Devarsh.
Thank you.